Good weekend, all. Ira Epstein of Linn & Associates with your weekend version of your Spider ETF videos, and this is for Saturday. I'm on the 27th of March 2021. So we had on Friday a pretty good end to the market. You lifted strong into the last hour. Not exactly sure what all that lifting was about, but it was powerful. Not much has happened on the Suez Canal. We added a few more oil rigs over the weekend. So let's go to the chart action and see what we have. And as you take a look, we're in what I'm going to call on XLK consolidation. This is a market that was going up, had this break, and it's just going sideways. Consolidation isn't necessarily the end of a trend. In the short term, the trend has turned to the downside, but remember, we have this phenomenal rally. So is it going to be more than just a short break on the market? Well, it is a weekly chart, so we have to pay attention to that. But if you'll notice, the market is refusing to close underneath the 18-week average of closes. This is the 100, that's the 200. This market turns back to the upside if prices get over 135.09. In order to say, okay, we're going to come to a downside, you've got to get a close under this 18-week. It has refused it. So, very interesting chart right here. Let's assume that I'm right and the market decides to follow the other parts of the market and go higher. The resistance would be the upper Bollinger Band at 137.96. Let's assume that the market just wants to drop from here. Well, as long as it doesn't take that number out and reverts down, you still have the potential for the lower Bollinger Band at 122.43. Momentum has been pointing down, but as you can see, it's starting to turn. You know, it's pretty hard to be these as you're looking on either side of you if you're in the QQQ or anything and you're going, what the heck's happening? Everything else is running on me. In PAVE, well, this market's not staying down on the weekly charts. Now, the reason I keep showing this is we keep hearing the Biden administration, and you know, the threats are not subtle any longer. They're going to get their programs through. If that means maybe changing the rules in the Senate, they're not beyond that at all. The idea of reaching across the aisle, that sounds great as long as you're on my point of view, and if you're not, we'll do something else. That seems to be where we're at. Who wins on that? Well, infrastructure. Because that, after COVID, is the next event. And that event will happen faster than people think. Now, do I know if it'll get through? I'm not saying that. The event I'm talking about is the full-scale push to get this done. So as you're looking at markets like this, I grabbed hold of this and started showing this to you at the latter part of 2020. And the reason was, my idea was, that's the next thing after the COVID. So far, it hasn't proven to be too bad. What is the trend? It's clearly to the upside on the weekly charts. You keep getting held back at the upper Bollinger Band. You did that back here and here, but it's having no problem getting up there, consolidating, and moving higher. Until the trend is over, it ain't over, right? XLI, you know, it's hard to be short a lot right now because the market's in the mind frame that America, at least, I can't say this about Europe, I can't say it about India, I can't say it about Latin or South America. I can say it about America, the United States. I can say that we are getting our cases more under control, but it's not easy. You know, all these kids that are out there on spring break, and I'm sure you're watching Miami Beach. I lived from what you're seeing on TV a block and a half away. So I know very well what is going on when I see the different cafes. I know every one of them. I lived there for a long time at that part. I'd hop on the weekends and go there, and I loved it, obviously. Well, I'm not there anymore. But to make a long story short, those kids are just going to bring home what? Take a look. They're going to, if anybody's got COVID, I don't see a lot of masks being worn. Maybe you do. What about Daytona Beach? What about in Texas? I can go on and on, all the areas where this is going on. So it is a problem, and we will probably get a small surge. Let's hope we get the herd immunity first. So as I look at this, I get it. I get what's going on, and you should too. All we keep hearing about is we're going to spend our way into another level. But you're 3 days over, or 3 weeks over, the upper Bollinger Band. It's rare that you get more than 4. You can occasionally get 5. You did that back here for the 4th, and then you Saw that. So I'm a little concerned that we're getting ahead of ourselves. In the energy sector, I don't think that if you had the Glenn, is it called the Glenn Evergreen, I think it is, that 430-yard long ship, if it weren't blocking the Suez Canal, I wonder where energy would be. But it is blocking it, and we don't know when that ship's going to be freed up. They're working, I hear, almost around the clock. They need Mother Nature, which comes in tomorrow, and the water is supposed to go up 18 inches with the high tide. If the ship won't float with all they've done, the next step is, before the next high tide, they have to bring in, after Sunday, I guess it would be, a way to take off 600 containers off that ship. Get it then light enough for the next tide to do it. They'll eventually get it out, but think of what it's creating, the havoc. Well, you can see how the market came down, fighting now at the 100-week average of closes. If and when that ship gets released, I wouldn't be surprised that the markets want to back off a bit. You're still with an embedded reading. If it gives ground, I wouldn't be surprised to see wherever that 18-week average come in as the next support. I am not bearish. You still have the pattern of higher lows and higher highs. When we step over to SPY, now I've dropped QQQ on the weekly review. I'm replacing it with markets that are clearly in uptrends, higher lows, higher highs. You did have that pattern where you made the higher high, followed through. So the next resistance point, if it goes up, let's call it the 400 level, is the market embedded. All the numbers are over 80 here, they were over 80 there, and they're over 80 on the week before. So the answer is fully yes. Until you lose that with the reading under 79, I say that the market on pullbacks gets bought just the way it's been and continues to try to drive towards the upper Bollinger Bands. My online charting course that explains all that is done. So we'll start releasing this week, all right? I today shot the intro videos where I'm in the pictures. You'll see I'm wearing this outfit, isn't it pretty? All right, so we've got that. You can see how the market right here, a bit overbought in the emerging markets. So what are emerging markets waiting for? The daily chart's not pretty. The daily chart has been coming down, not this chart. The daily chart is showing you that correction. The weekly staying up because as soon as you hear more vaccines are available in Europe, India, South America, Latin America, boom. That's what the market is betting on. So you get these markets that pause, but there's nothing bearish on this chart at this point. Can we get an embedded reading? Well, both numbers were over 80. Remember, you need at least 3 weeks in a row. They were over 80 here, but not here. You need to get another week before we can make that determination. In GLD, gold just simply doesn't want to pop with all the inflation talk. Bitcoin has caught that bid. The other metals, platinum and palladium have done better, but palladium's been the outstanding metal to the upside. Bitcoin giving a bid up in gold. Now, for gold to finally say maybe it's getting to the point where it doesn't want to continue to make lower lows, I would say any move this week that gets over 164.15 would be the beginning of that process. That could give you higher lows and a higher high, breaking the pattern of the lower highs, which started here. Lower highs and lower lows. You ran 3 weeks, 4 weeks under the lower Bollinger Band, and now you've popped back. And momentum, well, let's talk about it. Is it embedded? Both numbers are under 20, both under 20, both under 20. Back here under 20, but not there. So you have your fully embedded reading. If this closes over 21 this week, there's a good shot the market is going to argue for what I'm saying, and we get a bear market rally back up here. I'm not saying it starts a bull trend. That takes a little more work, and a close over probably the 169.5 level. In the gold miners, they've been weighted down by gold. They're oversold. Here too, if you were to get over 34.48 on a weekly chart, I think you'd bring out the buyers in the market. And I think they'd be looking for wherever that upper Bollinger Band